Off you go.
Okay, let's imagine a familiar scene. You're sat at your desk, working hard. You get an email purporting to be from HR. Urgent action required. Update your payroll details or you won't get paid. Would you click? Would your colleagues? It only takes one click and the results can be devastating. So I'm Tim Moore from Think Cybersecurity, and we don't train people against these threats, we change their behaviour. Let's go back to that email and imagine if prior to receiving it, you'd be nudged from time to time when using your email and shown an example of a real phishing email so you knew what to look for. Or that when you clicked on this link and hovered over this link, you were nudged to say, be careful, this isn't phishing. Or if you clicked on it, when you reached the web page, you were nudged to say, be careful here. These are just a very few examples of the way we can nudge users to make secure decisions and deliver the next generation of security awareness. But back to the problem. Whilst phishing cost businesses tens of billions of dollars globally in 2019, it's actually just the tip of the iceberg in terms of the problem and the solutions we offer. 90% of cyber attacks start with a human user. Technical controls can never be 100%, so your people will always be the last line of defense. But who here has done corporate mandatory awareness training? It's pretty boring stuff. Infrequent, overly complex, quickly forgotten. Less than 15% of users trained this way actually change their behaviour. At Think Cyber, we know there's a better way. We've applied the theory and evidence of how people really learn and behave, including the Nobel Prize-winning nudge theory, and we help users make the right decision at the right time. Our innovative and award-winning software, Red Flags, understands, tracks, and learns user behaviour. At a point in time, are they in their email, plugging in a USB? And over the long term, do they engage with our awareness? And then it delivers nudges and awareness based on that understanding. Our competition's best understood by understanding how you drive behavioural change. Optimal content, optimal timing. E-learning, pretty poor on both counts. Fish test train, a bit more timely, but the government's National Cybersecurity Centre has recently questioned the efficacy of this approach. There are some organisations applying behavioural and AI approaches, but they're still turning to e-learning as the delivery mechanism. Our approach is highly differentiated from what these guys are doing in three main ways. Firstly, we're adapting the awareness to this continuous risk assessment of what the user's doing. Then we're delivering real-time nudges rather than lengthy training. And then the system can be optimised by applying machine learning to aggregated data sets of behavioural change metrics. This is a $2.5 billion market growing at 42% per annum. It's a market that's seen significant exits for the likes of FishMe and Wombat. And it's a market that Gartner highlight is crying out for an innovation just like ours. We've seen some fantastic traction, recently winning the SC Award for Best Professional Training, with customers the likes of Cambridge University, Tesco Bank, Camden Council. But what's even more exciting is our trials and pipeline. About to kick off trials with Vodafone and Kinetic, and with Unilever and Bupa in the new year. We've naturally started with direct founder-based sales and then transitioned to more targeted prospecting and inbound content marketing. And now we're exploring some channel partnerships, even with the likes of Deloitte and PwC. Red Flags is sold on a subscription basis per user per annum. With your investment, we'll be driving towards a 10 million ARR by 2023. The current value of our pipeline is about 2.5 to 3 million, which backs up these projections. Our highly experienced and credible team includes the ex-global heads of IT and of InfoSec from the cyber arm of BAE Systems, a company previously known as Detica. Detica is well known for spawning successful cyber startups, our friends at Digital Shadows, Panacea, Garrison. And so to our ask. We're looking to close a 1.5 million seed round back end of 2021, and that's to fund two main things: to significantly accelerate our pipeline through hiring sales team and scaling up product development. We're also open to conversations with angels. And so to summarize, security awareness needs to change. We are that change. That's Red Flags from Think Cybersecurity. Thank you.
He's given Think Cybersecurity. Woo, 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 woo. And look at that. You had like 7 seconds to spare. That was awesome.
Should have talked for longer.
Over to the judges. Judges, you have 5 minutes. Off you go.
Hi, Tim. I'm Simon.
Hi, Simon.
Just a quick question. Do you plan to cooperate with insurances? Because the product you are offering is, at least from a perspective of cyber insurance, really interesting.
Yeah, it's a good point, actually. We're looking to deploy with Willis Towers Watson, who are insurance, although that's internal. We have had a few conversations with the likes of Munich Re around the idea of pushing this out to their customers as a resale opportunity, because we're almost like a black box. So you could, at the end of the year, you could see how well people had been doing on their awareness. It's definitely a channel for the future, absolutely.
Yeah, I would recommend that. And my second question is regarding your existing customers. How many do you have today? Can you say that?
So it's probably about 5 or 6. So the likes of Tesco Bank is probably our biggest and most exciting customer. And then we've got Camden Council, part of Cambridge University. At the beginning of next year, we're hoping to be deployed with Vodafone. So we're just running a paid trial with them at the moment, and the same with Kinetic. So there's some quite exciting prospects in the pipeline.
Okay, and last question. How difficult is it to implement?
It's very straightforward. I mean, it's basically installing an application like you would push out Word or any other application onto the desktop. It hasn't got any deep integrations because it's really talking to the operating system to see what the user's up to. So we find it pretty straightforward.
Thank you.
Thank you.
Thank you very much,
Nice.
Tim. I have one question.
Yeah.
Who invested in the company so far?
So we did an angel round at the back end of last year, which we did through Angel's Den, and a little bit of friends and family. So that gave us 260K. We've also done quite a lot of Innovate UK grants, which have been useful in sort of aligning with developing the product roadmap, essentially.
That's amazing.
Hey, Tim.
Hi, Dave.
Great presentation. I'll admit it's not an area that I'm that familiar with, but what's the sort of timeline for your clients seeing an ROI? Because obviously selling enterprise right now, this isn't must-have, but with certain budgets being restricted from clients, how long before they see an ROI?
It's a good question. I mean, in some respects, some of the stuff we're doing with Vodafone, we're doing stuff that they can't currently do. So they've analysed their risks, and they've understood that there are certain people who need to get more targeted awareness and security advice, and we're giving them the ability to do that. It's something they can't do at the moment. So we should be able to, within 3 months, have delivered some content to these people to start to steer them in the right direction.
And I mean, off the back of that, how much agency work do you feel like onboarding a new client is before this sort of rolls into like a SaaS style onboarding?
Sorry, how much work do we need to do to? It depends a little bit. So we have a kind of an out of the box offering, which we're saying, well, look, just take this, and we've had that certified by the government's National Cybersecurity Centre as a kind of accredited course. That's what we use with smaller customers. So here it is, it just works, install it. And then with the bigger clients, we're working with them to do exactly what they want. But then that comes at a premium price, essentially.
Nice. Fantastic. Any other questions from the judges? We've got 1 more minute.
Yeah, I guess just off the back of that one, I mean, at what point for the bigger clients is it completely self-service, where there's no longer any reliance on you guys?
Yeah, it's a good question, and I think that's partly depends on our roadmap. So at the moment, part of the service is that we will help them create content. The conversation we're having with Unilever, actually, they want to do the content themselves, which is an interesting one, because in some respects, the money saving is to say, well, we'll do it for you, and you don't have to have a team. But if they want to do themselves, the next part of the product roadmap is to build in some of that self-service, so they'll be able to create content and push it out directly themselves.
Yeah, I imagine when you go out to speak to institutional investors, which by no means are they the only types of investors that you need to talk to, but that will be probably the sticking point that they want to understand is how can this become scalable in a way that you don't need to manually onboard every and sort of monitor every single customer.
Yeah, no, I understand that. Yeah, and I think that's definitely growing, and we have some customers where it's just kind of turn it on, off you go. But yeah, that's a good point. Thank you.
I'm going to stop you there, guys. Ladies and gentlemen, please give it up for Tim with his fantastic pitch and coming off the cuff. Thank you so much.
That's all right.
Well done,
Thank you
Tim.
very much.
Round of
Done.
applause, ladies and gentlemen. Woo! Fantastic. Well done, Tim.
Thanks very much. Cheers.
Nice. I love the fact that you went first and you were just literally just like, I'm ready, I'm good to go. That shows somebody that's prepared and ready to run a business. I love it. So here's the next person. We have Adam in the room. We finally found you. What happened, Adam? Did you get lost
Can
in
you
the
hear me
weeds?
okay?
Yeah.
Yeah.
Yeah,
I don't
we
think,
can hear you.
I think when I tried
Can
to
you-
jump in and I think everyone else moving obviously, meant I couldn't hear now. So happy switch.
No worries. Fantastic. Are you ready to go, Adam? Your pitch starts in 5, 4, 3, 2, 1.
Cool. So hi everyone, I'm Adam, CEO and founder of Hollabox. I want to start by saying, if this pandemic's taught us anything, it's that, the power and the value of video, as a tool to connect and communicate. This very event is actually testament to the power of video, right? But my team and I, we saw the power of video long before this. It's been our vision for the last few years to actually help people make stronger decisions through user-generated video. So they can be decisions as simple as what I want to do at the weekend, all the way to influencing big decisions in our lives, like helping people decide on the homes they want to buy, the places they want to work, and the areas they want to travel. So the way we're doing that is actually empowering any corporate or any individual to actually have access to user-generated video at key decision-making moments. We're doing this because, based on extensive research on our own network, we know that corporates are really hungry for user-generated video as part of their audience engagement strategies. And we know consumers, particularly younger consumers such as Gen Z, they engage most of this medium above anything else in the market because it's high trust factor and bite-sized nature. So what we've done is created a self-perpetuating two-sided platform and service that on the one side generates highly quality experiential video content, and then on the B2B SaaS side allows any business to step in and syndicate that content to their own websites, apps, emails, and social media as part of a B2B SaaS play. So on our B2C side, we allow any person with our platform, with our app, to create bite-sized videos sharing their real-world experiences, their time at any restaurants, coffee shops, parks, cafes, etc. Our platform then creates a shoppable viewing experience for them. So the content you're watching, you can book tables at those places, you can get taxis, you can order the dishes you're seeing, and you can share those things with your friends. We're adding particular value in these strange circumstances by showcasing, the experiences that are outside, the ones that you can virtually queue from, the ones that are still participating in various Eat Out to Help Out schemes. And obviously the nature of our content being authentic generated video means you're seeing experiences that are the most true to how they are now, right? The most ones that are practicing social distancing, you're getting a real flair for what it is. So it's making us the go-to Gen Z app of today. That platform's gone viral in a very short space of time. We've 10x'd our user base to well over 50K. We got over 10,000 videos engaged with each week. And before the pandemic, we were just in London. We're now across the UK and other parts of the world. So we are becoming the go-to Gen Z app. How we make money is through our B2B side. So as I've already mentioned, it's a platform where any business can come in and syndicate that content, their own websites, apps, social medias, and their emails. And the reason they want to do this is because they see the power of user-generated video and they want to use it at various digital touch points to engage with their own audiences. We've identified around 10 different verticals and sectors that this works in. So as an example of how this works, using the property vertical, a company like Zoopla, Rightmove, Purple Bricks, or any property broker or estate agent for that matter, would be able to plug that API into their site. It'll pull content or live video content from around any one of their properties, showcasing a real-time snapshot of the local area. So the home seeker is seeing what local businesses, local people are talking about right there and then. By having this API on a site like Zoopla, it's boosting their SEO, and engagement with that content can drive the user or the user of that platform, their audience member, to any CTA the company wants. So in this case, it might be to go and book a viewing. Even longer term, we have the ability to extract our content by classifying objects, tracking words, and giving these companies data on trends, behaviors, sentiments, and interests, and even at as hyper-localized level as a high street. So you think again for a company like Zoopla, if they can get data like this on what people are talking about and what people are doing and going to Even as small as on a single high street, that's going to be really valuable for them. And we also, on the longer term, have advertising opportunities that we believe will generate much higher engagement rates than that typical social media. You know, we can show ads for, you know, Costa, Pret, Cafe Nero, etc., when users are searching coffee, you know, versus current social media where the content's so generalized, the adverts you see tend to be completely irrelevant to your user flow.
30 seconds, Adam.
Okay, the team behind Hollabox, so we've created the right people to kind of get the business to where it is and take it to the future. Our CMO worked for HSBC for 8 years, developing an app very similar to ours internally, which is scaled to over 70 countries. Our CTO has worked for likes of JP Morgan, led other startups, amassing well over 2 to 3 million downloads for his products. We've also got members of the team that have industry experience in Time Out, in Culture Trip, TripAdvisor, and the chap who's built our API used to build APIs for Goldman Sachs. I have worked for companies such as BBC, GSK. I'm an award-winning content creator, young enterprise winner, young enterprise winner. And we've already got 400K in our round, essentially, from notable investors such as Just Eat Ventures, who need no intro, and a series of really successful angel investors as well. Chris Malling, who had a notable 9-figure exit for his company, Money Credit UK. Vincent McKevitt founded Toast, Megan's, some very well-known food chains in the UK. Paul Daniels, founder of Daniels Food Group. So we've got all these guys on board that have been handpicked to specifically help us on our journey. And we're looking for another 250K to essentially help us build on the organic traction we've got by deploying our marketing strategies in 5 new cities across the world. And we're also looking to bring on some more sales talent to help us hit our targets of the B2B API I've already mentioned. So we want to have 3 pilots set up with corporates in the next year. So that's where we are. Thank you for listening, and have to take your questions. I'll pop my email in the comments as well. So if anyone wants to email me afterwards, they're very welcome to.
Fantastic. Ladies and gentlemen, please give it up for Adam. Woo, 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 woo. Lovely, lovely. Over to you, judges. His pitch went slightly over, so you've just got about 3 minutes for any questions that you guys might have.
Thank you. I have a few questions. I'm just gonna, start with the competitors. I think it would be really great to just get a sense of who's out there in the space that you're disrupting. I had in my previous portfolio a few companies in this space, and it would just be great to understand how do you differentiate yourself.
But you've got obviously the giants of the space, the Time Outs, TripAdvisors. These guys are hugely successful in what they do, but they cater to a slightly different demographic to us. Their kind of key user is between the age of 35 and 50. They're not communicating the same language as Gen Z. We are building the next generation platform, the one that this generation and future generations are going to use by talking in the same medium as them. There's been other startups that kind of come into this space and they believe they're solving the problem through various things like AI or trying to tackle tongue-in-cheek reviews and things. But we're winning because we have built a community-based platform that takes the best of existing social media and the reason Gen Z go and use existing social media, and then taken that over, extrapolated that out and put it to a sector that is dated now. This is the review sector. So that's why we're winning, and that's why we're beating any other startup in this space, because we're taking a people-first approach, a community-first approach versus other solutions that have tried to solve this through AI. But people buy into people. You don't decide to go to an experience because a computer told you. You go because your friends told you, and that's why our platform was working, because it's that authentic voice, giving people an authentic voice.
That's a very good point, which naturally leads me to my second question. What is your sort of cost of acquisition, so CAC and LTV, if you were to, tell me something from your early analysis?
So over the last sort of 12 months since we've been going, we've managed to sustain a CPA around £1, which has been really successful. We have a viral coefficient as well of around 3, which means every user we get brings on around 3 new users. So I guess what's that, 75% viral coefficient, which is kind of really important for a company in our play to have these strong network effects. Unfortunately, before the pandemic, we had our pilots cancelled for our B2B plays, which would have been EasyJet and Whitbread. So we're slightly pivoting away from sectors that have struggled, and now we're going towards sectors such as real estate, etc., that haven't struggled as much. So they would have obviously helped towards calculating our LTV, etc. But the the cost per acquisition has been very sustainable on our B2B side, B2C side, sorry.
Nice. Awesome. Any other questions? Do we have any questions from the judges? Any other questions?
I mean, obviously, Twitch, just because there are investors. Case or travel use case could be for things like staycation, because it does, you don't have to fly to a new city to need recommendations and to create and share content.
I can't really hear you very well, but I think you said something about travel and landing in a city without needing. One of our pilots was with EasyJet, and they saw the value of when you do land in a new city. Obviously, you're not necessarily aware with your surroundings, and we had the ability to syndicate our content onto their own apps so that it kept users in their dwell time and extended their customers' user journey. Because, you know, with an airline, once you land in a city, you don't need their app anymore because you've checked out, you've had the flights done. So these companies saw the value of our content in their story, in their kind of platforms. So that was something we were obviously discussing getting paid for. And obviously that's a lead generation tool for Hollabox after these companies are eventually finished on their holiday. I don't know, I didn't really hear your question, I'm afraid. So, but you've got my email, so if there's any other questions, hit me up afterwards and I'll be happy to answer them.
Fantastic. Perfect timing, because time is officially up. And ladies and gentlemen, please give it up for Adam one more time. Woo, 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 from Hollabox. Fantastic.
Thank you, guys.
Well done,
Thank
mate.
you.
No problem. Stick around, and I'm sure people would love to connect with you. Right, next we're going to go to our next startup from Whitelance, and this is Iman. Iman, are you in the room?
Okay, so yeah, my name is Iman. I'm the founder of Whitelance, and we make it really easy for people to launch freelance marketplaces. So, as you probably know, the way that people buy services is shifting at the moment. If you want to buy a taxi service, for example, previously you would go to your high street firm or you'd call them up and they would connect you directly to a taxi provider. Now, of course, you use Uber or Lyft and online marketplace to manage that. And that's what's happening in every service space. So whether you think of law or accounting or engineering or education, the way that people buy those services is going from an offline agency into an online marketplace. So businesses these days are thinking to themselves, how do we stay competitive in this kind of new dimension with technology, where if we run an agency company, which is doing things in a traditional way, we could be disrupted by a new marketplace that will take all of our talent. So we're helping companies to launch these marketplaces much more easily. And if you are launching a talent marketplace or a service marketplace, it's very difficult. It takes a lot of time, it takes a lot of money, and it's just a lot of hassle. And what we do at Whitelance is just to make that very easy. So if you like, with a Shopify for marketplaces, you launch your marketplace in a day. Instead of paying hundreds of thousands, you just pay a simple monthly fee, and we make everything very easy. And what you get is a marketplace in a box that just works. So people can post a job, and all of the talent on the platform can be found, and you can set up and you can hire them, and whether it's a single bill or a monthly bill, you can manage all those contracts online. And the person who is running that marketplace, think Uber here, or TaskRabbit, or any other marketplace, they can manage everything via the admin dashboard. So at the moment, if you're looking for this kind of a marketplace solution, you either raise a lot of money and build out the technology, which most small businesses can't do, or you buy a cheap kind of code, a PHP code that isn't really suitable for purpose and it can't scale. But what you really are looking for is a Shopify-esque service where all the tech has already been built and you just pay the monthly fee, and that's what we're doing in our space. So there are other providers who've done something similar in other types of marketplaces, but for the we're working, which is professional services, there's nothing in that space, and that's the service that we're providing. Now, the potential here is pretty big. If you think of all of the way that professional services are transacted at the moment, most of them are offline. They're swiftly moving online. And we are looking at a potential figure in the future of total global value of 8 billion in terms of annual revenues. Our customers at the moment they range from country to country. They're USA, UK, Finland, Austria, Ghana, Canada, etc. They're in IT, real estate, research, cleaning, hotel, education. They're all businesses who want to launch talent marketplaces to connect customers with service providers. At the moment, we charge a £500 a month subscription fee, but our future goal is to shift this to providing our service for free and then just charging a 2% transaction fee on the total volume of that particular marketplace. We launched we started building our technology in January, and over the last few months, we've been signing up 2 customers every month. We're now at our 12 customers, our first 12 customers. That's generating around 6,000 a month, which is around 75,000 in annual recurring revenue. Our goal is by the end of this year to reach 16 clients, and 3 years down the road, we'll be doing about 180 clients, which is doing about 3 million a year. We've done, this is a bit outdated now, coming up to 150,000 in revenues since January. All of our signups have been just from organic search. We haven't spent anything on advertising yet, and we're signing up a new marketplace every 2 weeks. We've got a great tech team as well, people who've started built MVPs and taken them all the way through to acquisition and IPO. And at the moment, we're raising 400,000 with the main goal of hitting that the target of 500 customers in 5 years' time, at which point we'll be doing around 7 million in annual recurring revenue. That's pretty much it.
Yeah, great job, dude. I think like now it's the judges' turn to ask questions, so I'll let them go ahead and ask us questions.
Yeah, it's I said this earlier, I guess, in terms of when you're approaching investors for this fundraise, when you're deciding between institutionals and sort of angels and high net worths, your revenue projections obviously are not, if you're looking 5 years out, are not in the realm of the sort of economics that venture funds would be looking at. So I just, is that intentional? Is there a way to sort of look at expanding that out? Because I think for a lot of funds, sort of 5 mil revenue in 5 years, or whatever figure you said, I mean, it doesn't fit the sort of metrics that institutional funds are looking for.
Yeah, fair enough. I mean, I think, I guess it just depends on what our approach is. We've looked at things from a very conservative perspective. There's no reason why those figures can't be significantly amplified based on the marketing input. And the market size I referred to earlier was significantly higher than that. So we're targeting kind of 5 to 10 million a year in an $8 billion a year market. So there's certainly a lot of room for growth within that space. So I think we've just approached it from a more conservative perspective, really.
I guess it's when you're trying to paint the picture here of how this can be a $1 billion business. So in your roadmap, it can this could be revenue stream one. But the Whitelance vision of the business, becoming the sort of, it's your vision, but what other revenue streams can be incorporated in year 2 and year 3 as you're developing new products to sort of know that there's a route to get to a $1 billion business.
Yeah, that's useful. Thanks. I appreciate that.
Hey, man, how many people currently?
3.
Okay.
So it's myself, a CTO, and a lead developer.
And hi, Iman. My name is Simon. Great presentation. Thank you. One point I didn't really get is, and that's why I'm asking again, sorry, but who are your target customers?
Sure. So our journey up until this point has been really an exploration of what that target customer looks like. We've focused at the moment on entrepreneurs who are building marketplaces, so startups who want to disrupt a particular model. For example, they look at the architecture industry and think, this is so outdated, let's build a marketplace and bring all the architects on board and help customers to find the perfect architect really effectively. And we've been targeting these entrepreneurs. We consider these our low-hanging fruits. There will be a limit to how many disrupting entrepreneurs there will be in the market. So those have been our starting points. But our main goal is to target our businesses who, existing businesses, who have a certain number of contractors they work with, but they want to expand rapidly. So for example, our latest client has a business development agency with 10 staff,
Right.
and they want to get to 100, and they use our tech in order to accomplish that. So right now,
That is
entrepreneurs.
time, man. Sorry. I know this is really annoying, and I probably interrupted you halfway through your speech, but I cannot hear you. All I see is the blue bubble in the corner saying that it's going on. And I've left the chat a few times. It's not working. I was not privy to your pitch. But ladies and gentlemen, please give up for Iman, and judges and anyone else that has any questions, please follow up with him afterwards. You be able to ask him and follow him, but we are sticking to a schedule. And really, really well done, despite the technical difficulties. Really fantastic. But this is the nature of the beast, because we've literally just lost Flavia. And I'm like, where's Flavia? She's she's back. Here we are. Fantastic. Right. Next we have to pitch. It is Gavin from Jet.now. Gavin, are you here? You've been waiting in the aisles.
Hey, Tambo. Hi, everybody.
Hey, how you doing, Gavin? You all right?
I'm good. The audio's okay?
Yeah, audio's good, so I get to hear you, which is fantastic. It's all good. Nice.
That's cool.
Awesome.
Okay. I'm just
You
going
got
to
4
share
minutes.
screen.
Off you go, mate.
Thank you very much. Cheers. Okay. Okay, so my name is Gavin Miller. I'm the founder and chief executive of Jet.now. Jet.now is the world's first vertically integrated online travel agency and lending platform. So we're bringing embedded finance to the world of travel. So we're enabling consumers to pay for their holidays on a buy now, pay later basis. So with our platform, consumers can log on, they can book a holiday today, they can travel as soon as 7 days later, and they can spread the cost from 0% APR over up to 12 months. So we're a fully mobile responsive web app. We put Travel Now, Pay Later front and center of our value proposition. So consumers can see the monthly cost as part of the shopping experience. They can see what it would be to upgrade from, say, bed and breakfast to all-inclusive, or from economy to premium economy. And that leads to increased cart sizes. We also offer 100% payment protection on every single trip. And we think that's going to be very, very important for consumers in a post-COVID world. As a business, we've got the combined revenue streams of both an online travel agency and a credit lending business. So from one transaction, we're essentially getting 2 revenue streams. We launched in July this year after having worked on the business for around about a year, bootstrapping with our own investment and our own time. We raised our first round in June of this year, which has enabled us to launch during the pandemic. And we've seen some really, really promising metrics in terms of customer engagement, click-through rates, and in potential business. So since July to today, we've seen 3.6 million in potential business, and we've also been making sales. As a startup business, we've got some great partners. So we're working with the likes of Jet2 Holidays, EasyJet, Disney. We have hundreds of thousands of hotels, flights, and ancillaries. We have the technology to package that together and to sell that to the consumer on a buy now, pay later basis. We've assembled a great team. I've been an entrepreneur and a company director for 12 years, having previously built and scaled and exited. My co-founder, Guy Brown, Chief Risk Officer for GE Capital, more recently Bank Santander. We have Bertie Cordinley, who was UK Director of Technology for Just Eat. Clint Greaves, who's a CFO in InsurTech, PropTech, having run businesses from startup all the way through to IPO. And John French, who was ex-director for EasyJet Holidays. So we've assembled a really, really strong team to execute on our plan. We're looking for 500K as our seed round. This is our second round of investment. We want to use that to develop our own credit decisioning technology. At the moment, we're working with a credit lending partner. We want to obtain our licenses under the FCA and essentially working capital to execute on our growth strategy. So that's us. I'd just like to open it up for questions.
Fantastic. Ladies and gentlemen, please give it up for Gavin. Woo, woo, woo. Not only is he punctual, he finished early. Look at that.
Yeah. Well, let's leave some time for conversation.
Fantastic. Go for it. That means you've got 6 minutes of conversation, and Timoir's hands are already up. So go for it, Timoir.
Oh, I don't have any questions. I was just
All right.
Come on, Timoir.
I think your screen's lagging too now, Timbo.
Oh, that's great. Isn't that embarrassing? Just leave me hanging. It's all right. It's all right. It's absolutely fine. Go for it. Does anyone else have any questions?
I did.
So I do our travel sector investments at Founders Factory with EasyJet. So we probably know, I mean, I think Paul Conroy now runs the EasyJet Holidays, if you know Paul.
I'm not familiar with Paul, but I know John probably would be. So John was part of the hotel beds team that essentially they started EasyJet Holidays, didn't they? It was outsourced through hotel beds, and then it was brought back in-house. So he oversaw that initial development up to 100 million. So I know they'll be very well connected there.
Well, look, I think with respect to everyone else on this call, I think we should probably just take the call offline, like some chats offline. I'd love to hear it.
Yeah, that'd be great. That's cool, Dylan.
Awesome. Fantastic. Any other questions from?
Yeah. Hi, Gavin, Simon. I have one question. I mean, how do you manage your working capital challenge? I mean, or how do you finance between the payment of the customer and the day where you have to pay the travel agent or whoever gets the money? Can you perhaps describe that a little bit more in detail? That would be helpful.
Definitely, Simon. So at the moment, we're working with a credit lending partner. So for our what we call version 1, to prove the market worked, is we developed the travel distribution technology. We bolted that to a fintech partner. So they're underwriting our loans currently. What we're raising capital to do now is to develop our own credit decisioning technology and to take over that piece. So as part of that, my co-founder, Guy Brown, obviously his background is consumer credit, retail finance. So we pitched with Citibank for a warehouse line of credit. So essentially, once we've developed out the fintech piece, we would plug in a warehouse line of credit. So, we would have risk-based pricing that would cover our cost of capital and our OPEX and return a profit on that capital as well.
Okay, and your first market is the UK?
It is.
Or is it available throughout Europe?
So our product is worldwide, and at the moment we've restricted this to a UK market to prove this works, but we've already had some initial conversations with credit lending partners in Canada, the US, in South Africa, and in Australia. So we think this could be rolled out quite quickly.
And can you comment shortly on your competitor landscape?
Yeah. So at the moment, there is only one other fintech play here in the UK that's trying to approach this. We would be the first vertically integrated or embedded solution, which, we feel there's a lot of value there. We've seen the shortcomings of just a sole fintech play, because people are taking all of the credit risk without any of that upside uplift in terms of commissions. So for us, it's a very de-risk solution. So there are a couple of smaller fintechs, as I say, doing it as a B2B play. We would be the first vertically integrated B2C play.
Yeah, I like the model.
Thanks, Simon. Well, we'd love to have a conversation. We think we've got a great team. We've got some real promising metrics, and we're asking for what we feel is a right-sized round to get the job done.
Yeah. You should talk to Silicon Valley Bank, I think.
Well, thank you. Any intros or any advice? And what I'll do, obviously we can connect outside of this as well. So
yeah, of course.
Perfect.
Fantastic.
Thanks a lot, guys.
Nice.
It's been great to be a part of this.
Yeah.
So have a great evening.
Awesome. Nice. Ladies and gentlemen, please give it up for the charming Gavin. Look at him. Finished early as well. Fantastic. Awesome. Cheers. Thank you so much. Nice. Right. We're going to move swiftly along. And next we have Vuebox, and it is, is it Anwar? Did I say it right? Anwar.
It's all good. It's all
fantastic. Good. How you doing, Anwar? You all right?
I'm good. I'm good. A little tired, but I'm all right. It's been a long day. Been rain.
Yeah, I can imagine. No worries. Well, you got your 4 minutes. Your 4 minutes starts now. Off you go.
Okay, awesome. Can you all see my screen okay? Okay.
We can, yeah.
All right, awesome. Okay, hi guys. My name is Anwar Humu. I am the CEO and founder of Vuebox, which is a new social video platform which allows literally anyone to make money from their video from day one. So video online is absolutely booming. Mobile video consumption rises 100% every year, and 75% of all video actually gets played through a mobile phone. But at the same time, the industry is pretty messed up. Users upload videos on Facebook, Instagram, TikTok, and with millions of content creators generating trillions of views, can't monetize. So why is that? Why is it so hard for Facebook or these huge TikTok platforms allow content creators to make money? Well, essentially, there's two reasons. The first one is there's nowhere else to go. You know, people are just uploading it for free. They're happy with the amount of views that they're getting, and that's about it. The second one is brand safety. And brands are very cautious and nervous. And it happened to me. I used to be the head of digital marketing for Standard Chartered Bank. I was launching a multi-million-dollar campaign, and the day before I was going to launch, I had to kill everything YouTube because there was a Johnson & Johnson video in a pedophilic content on YouTube, and it wasn't good. So we had to kill everything. So we thought there has to be another way for this. So what we do, we can see, we use computer vision and AI to see what's actually in the video. We then give it a brand safety score. Once we give it a brand safety score, advertisers can actually set up their targeting campaign and push their ads through YouTube. It's completely safe because we set the score and we know exactly what's in the content, and they're not going to be associated with anything bad. Vuebox is super simple. You download it from the App Store on iOS and Android. You create a profile, and that's it. Start uploading content. How users get paid, again, it's really easy. Once you sign up to Vuebox, go in your settings, click monetization on, you get prompted with a Stripe account, fill in some Stripe details, you start uploading videos to your channel, you start ads will run in your videos and on your profile feeds as well. Then the revenue gets distributed into your Stripe account, and you can transfer it to whatever you want. Users are absolutely loving it. Within a couple months, we hit 40,000 people that's on the waiting list. We've built it on iOS, Android, and on the web. We've got 2,000 active beta users. We've partnered up with some of the biggest video publishers in the world, ready for the launch. The people who are on it today, they're on it on average 32 minutes, and they open it 3 times a day. We're talking to advertisers right now in preparation. How we're launching it, we're going to be doing the world's largest coordinated influencer campaign. Basically, all people from A-list celebrities right through to smaller influencers, all announcing that they've now joined Vuebox, all on a particular day. We've tested this. We've tested it. It works. That's how we got 40,000 people in such early stages. Now, to build something like this, you need a solid team. I used to be the head of digital marketing for Standard Chartered Bank. Before that, I was ex-agency, worked for some of the biggest ad agencies in the world. Widad, my co-founder, is ex-agency as well, and she runs the operations. So I'm very proud to have a female CTO. She used to be the CTO of Arty, and she's full-time with us now. Alex Avon is currently an executive at CAA, which is the largest talent agency in the world. They look after people. Yeah, great. They look after people from Justin Bieber right through to Elton John. Stefan actually designed YouTube Kids, so he's a multi-award-winning designer. And my, senior tech guys built ITV Player and Car4 and Arty, and yeah, we've got a great team. So what we're looking for $1 million right now. We've raised 560,000 from a few a couple angel investors, and we are EIS and SEIS approved. Thank you very much.
Nice. Right before the buzzer. Well done, Anwar. Fantastic. Ladies and gents, please give it up for him. Amazing. Really well done.
Thank you,
well
guys.
done,
Thank
well
you.
done.
Thank you.
Over to you, judges.
We've spoken a couple weeks ago.
Yes. Dylan, how are you doing, brother?
Oh, good, man. How are you?
I'm good. I'm good. Trying to beg him for this money. We're almost there.
You'll never stop. Unfortunately, the founder, you never stop your money.
Exactly. We're almost there. We're getting there. We've got quite a few investors lined up over the next coming weeks. I'm pretty sure we're going to close this very soon. So to go for our the next milestone of launching this thing. So getting there. Cool. Simon, what do you think? See you quiet, Timur.
No, my question is regarding competition, because a few weeks ago I talked to a company with a similar business model, and I think there's a lot of activity going on in your space. So would be curious to learn more about your view, how you see your competitors.
Yeah, look, at the end of the day, the industry right now is broken. YouTube hasn't changed in 15 years, but the industry has changed, and it just it hasn't kept up with the times. So I think right now, I know there's at least 5 or 6 people that's actually trying to do this, that's not getting it off the ground. But I really believe with the team that we've got in place, with the connections that we've got with Hollywoods and all these kind of huge A-list celebrities, and with kind of my background of being, advertising, really advertising focused, I think we can do some serious damage. And to get 40,000 people in just a couple months with literally no advertising at all. This is purely based on communities and word of mouth. And, I get emails every day asking when are we launching and all that. So yeah, there's 100%, because there's people that's trying to do this because there's a need.
Yeah,
it's either us or someone else.
I would call it the reputation topic for the advertisers. Yeah. How manually or how much automatically is the whole process where you check the videos?
Okay, so the way we've developed it, it's not just computer vision, right, and AI, where it just takes an object from a video and that's it. There's loads of companies that do that. What we do is that we understand what's going on in that video. So whether it's a fight video, if it's someone stabbing someone or preaching hate, and we've been training our algorithms now for over a year on learning exactly what is actually in this video. And then through our architecture, we've developed a brand safety score. So when an advertiser wants to advertise on our platform, they set their targeting and they also set their brand safety score. So if the brand safety score is really high, then any video that's been posted on Vuebox that has a high safety score, their ad and fits within the targeting, the ad will fit
Got 30 seconds. Any last thoughts?
Thank
Tamar?
you. Thank you.
Simon? Thanks. Awesome. Dylan?
I'll reach out individually.
Oh,
Fantastic. Nice.
thank you so much,
Ladies
Tambu.
and gentlemen, his time's up. No problem, man. Pleasure to meet you. Fantastic.
Thanks,
Really
guys.
well done, man.
Thank
Cool.
you. Thank you. Take care.
Awesome.
Bye.
Nice. Bye-bye. Fantastic. We're getting through this. We are down to our final 3 pitches, and he finished on time as well, which we love, which is great. Ladies and gentlemen, please give it up for Osman. Osman, are you in the room?
Yeah.
Osama, how you doing, Osama? Are you all right?
Yeah, I'm great. Thank you very much.
Fantastic. Pleasure to meet you, Osama. You have 4 minutes. Are you good to go?
Yeah, just let me share my screen and
Nice. Your 4 minutes.
all right. Hello, good evening, everyone. I'm Sam. I'm co-founder of Lessgo, a startup that aims to revolutionize socializing in real life through ease and comfort of small groups of people doing things that they enjoy. So socializing has been on a steady decline, especially over the past couple of decades, despite the advent of a number of different social networking platforms. And loneliness has been a growing problem in cities. So, for example, in London, despite seemingly a bustling place, it's among the loneliest places as well, where the younger population is the most affected. So existing alternatives are sort of divided into 2 categories. So we've got event discovery apps, for example, Meetup and Facebook events. And these are great for exploring what's going on around you, but they fail to provide a good platform to connect and socialize with other people. On the other hand, we've got dating apps, and many people turn to these apps to socialize or make new friends, but they again are not actually designed for this purpose. And that's where the opportunity lies for us. So we focus on socializing in real life through shared experiences, an area that has not been addressed by existing platforms. So Lessgo allows you to meet up with like-minded people for an activity, which could be anything, for example, a concert or an online pub quiz, or it could be something more casual like a run at the park, a yoga session, or even a tennis game. So the app allows you to browse nearby meetups that match your interests, and are basically we use a recommender system that uses state-of-the-art AI to basically match your interests and show you the most relevant meetups around you. You can basically join a meetup, and we basically focus on small groups up to 8 participants, and the reason for that is we want to promote meaningful and direct exchange between the users. Our business model is based on primary revenue stream, where the user would pay for a premium membership to remove ad and unlock additional features. This is a model that has been very successful in recent apps, for instance, Spotify, or even some of the dating apps as well. The secondary revenue stream is based on B2B partnerships, where we allow businesses to access our local user base through featured events and promotions and venues. So the team consists of myself and Ruben. We are both PhD students at Emil College in Artificial Intelligence. We have extensive background in multiple startups and also in companies like Google. We also have recently recruited 2 full-time developers and marketing people as well. So now we are a team of 6 at the moment. And we are actually looking into our next steps. And yeah, so basically successfully rolled out our open beta on both iOS and Android, and I would highly recommend you guys to actually check it out. I believe that basically speaks for itself. We got our first 150 organic users, and we've got 32% daily active users and 20 plus meetups hosted as well. And the next steps basically focus on rapid growth, particularly focusing on influencer and university partnerships. So yeah, why now? Basically, as the lockdown eases, people are looking to get out there again, and the situation kind of provides us with a short-term opportunity. So we aim to grow rapidly in the coming days by providing a platform to meet safely in small groups in line with the rule of 6. On the other hand, we've also got the freshers situation this year. So all of the freshers activities were basically postponed to earlier next year because of the COVID situation, and students are facing an increasing challenge to socialize among their peers. And that's also where we want to basically step in and solve their problem as well.
30 seconds, Osama.
Yeah. So yeah, we are raising our pre-seed of 220K. We have just recently got our SCIS and EIS assurance to basically sustain the growth as well as to accelerate our marketing efforts. Yeah, that's pretty much it, basically.
Nice. Ladies and gentlemen, please give it up for Osama. Well done. Woo! Fantastic. Really, really good. So I'm going to hand it over to the judges next, and then I'm going to ask Flavia's questions because she's struggling to get onto the technical issues. However, she can hear you, and she's got 2 killer questions lined up for you. So I'm going to let the other judges go first, and then I'm going to ask away.
Yeah.
Hey, Osama, quick question. It's kind of hard to monetize. So what are your plans to making revenue from your users?
So yeah, so our monetization strategy is based on 2 revenue streams. Sorry, I can hear, I don't know, for some reason I can hear my voice echoed back. Okay, so yeah, so our monetization strategy is based on a premium membership where basically users would pay for a premium membership to unlock additional features on the app. So basically, the idea is that we would limit the number of, for instance, invites a free user can see, for instance, on the app, or limit the number of meetups that they can see in one day, or perhaps people they can invite to their meetup as well. So it's something that we want to allow free users to basically use the app, obviously, and make that usable for those free users. But at the same time, we want to basically have free membership for those users who are going to be the active ones or the ones that are going to use the app the most, I suppose.
Nice. That's kind of in line with what Flavia was actually asking. So her questions put verbatim, I'm going to use her exact words, are competition and monetizing strategy for this company. Naturally, it's really challenging without critical mass. What do they assess that by? So how are you assessing that by?
Yeah, so I mean, I think that's a very good point. So we don't actually plan to until we get to our critical mass, which we believe would be at least 50,000 users in London specifically. So again, we only do plan to introduce the premium membership later next year, actually. And the reason why we wanted to actually go with the premium model was because it's been tested with different apps and it has been very successful. For instance, in the dating apps category, for instance. And to sort of go down that path. I think that's, and also I think I saw a question in the chat where someone asked how it is different from meetup.com. I wanted to just quickly also say that. So for instance, meetup.com's business model is based on charging organizers a fee, which again makes that similar to other event organization apps. So we very much differentiate from, we want to differentiate ourselves from event organization apps. We're definitely not that. In fact, I would say that in the long run, we are probably complementary to those event organization apps where we want to provide sort of a social element where people can socialize for events, right?
You got 1 more minute. Any other questions from the judges? Nice. Fantastic. Well, ladies and gentlemen, please give up Osama, well done. Fantastic. And he's at Lessgo. Thank you so much. Great. Fantastic. We are down to our last two. So, ladies and gentlemen, oops, there's the alarm. If you could give it up for Brooke, are you here?
Hi everyone. Can you hear me?
Yes, we can hear you. How are you doing, Brooke? You ready?
Great, good.
Nice.
My name is Brooke
Awesome.
Andrews. Oh, sorry. Good to go?
Go for it. I was just going to tell you to go. Yeah, just go for it, Brooke.
Cool. So my name is Brooke Andrews. I am a serial successful entrepreneur and co-founder of Rotaro, a fashion rental platform that will dominate the re-commerce space in Europe in 5 years. Consumers have less disposable income than ever and are making more informed decisions than ever before. Fast fashion is contributing to 1.2 billion tons of CO2 per year. And unfortunately, a woman only wears a piece of clothing on average 5 times. So I'm going to explain to you why pay-as-you-go clothing is expected to expand to a 4.8 billion pound industry by 2028 and how Rotaro will win that game. Re-commerce is booming and there's room for more than one player. The problem with the current platforms is that they're focused on a very wide market and peer-to-peer platforms that ultimately, in the long run, lose longevity and quality control. Rotaro is focusing on a niche market in order to make that elevated customer experience of luxury e-commerce platforms accessible. We have and continue to develop meaningful relationships with brands and retailers in a profit-sharing structure to remain asset light. So this has led to not only a highly engaged community, but a highly loyal one. We have a 21% retention rate, which is about 5 to 10% higher than on average in e-commerce. We have 3 key revenue streams. Rental, where you can see our average rental revenue is £45. In the last 30 days has gone up to £54. And in future, recurring subscription revenue. We move on to our resale platform where we rent an item 10 to 15 times before we find it its forever home. And in future, paid partnerships. So our route to market has seen early customer validation. We have grown our community 40% faster than our top competitors in the UK. We have developed 70+ brand partnerships and are in current conversations with 5 top UK retailers and designers for exclusive partnerships. We've predominantly been operational during the pandemic, but pivoted quickly to remain cash generative. We have 40K in revenue and MRR of £4,000. In the last 30 days, we have seen 62% increase in orders, and that can be through new customer acquisition and customers ordering more than one item. We have won the UK's best fashion rental platform as voted by The Independent. We are consistently top of the list in Vogue, Harper's Bazaar, and many other press and publication endorsements. Our team is made up of industry insiders, so we really understand the market and we have deep connections in order to act on. Myself, coming from Condé Nast Digital, I worked across brands such as Vogue, GQ, launching their digital platforms. I previously ran my own lifestyle tech company from seed to sale. Georgie Hyatt, coming from WGSN as a fashion and trend forecaster. So she worked with luxury brands, informing them on sustainable practices and how to implement. And Charlie Knowles, entrepreneur who has managed large-scale teams and 7K-figure projects.
Just under a minute.
Oh, sure. So Rotaro is seeking 500,000 funding on an 18-month projection with strategic relationships from angels and VCs. We previously had 125K raised from friends and family. And we are looking to shape the future of fashion with you. Thank you so much.
Ladies and gentlemen, please give it up for Brooke. Awesome. As you know, I've got a couple of questions here from Flavia, and I'm going to just read them straight away. So the first one is, what brands are you working with, and how do you quality control?
Sorry, you cut out there, Tambo.
Oops. Sorry, can you hear me now? So the first question is, what brands are you working with currently?
Yeah, so we work across many different brands, Stella McCartney being one exclusive partnership that we're working with. We work across Rixo, Ganni, kind of cult label favorites that we know rent well. And in terms of managing our quality control, we do that through owning our own centralized stock. So by owning our own stock, we're able to offer next day delivery, medical grade cleaning, all kinds of things where we manage that directly.
Fantastic. And that leads on to the third question. It is why rent, not buy? Is this around premium products, top brands? Is that something that you're working with?
Yeah, absolutely. So we believe in access over ownership. So today, as I mentioned, consumers are being very mindful about how they spend their money. On top of that, a wardrobe is very disposable. So we act as a discovery platform for people to potentially discover brands that they might not have been able to previously afford, but then also use sustainability as a pillar in our business.
Fantastic. Right. And I believe those are all the questions from Flavia. I feel just like a second news anchor, just able to report everything else from the scene. I'm going to hand it over to the other judges. Do you have any questions?
Sure.
Hey, Brooke, quick question. Team.
So we have 3 co-founders, and we freelance with one PR girl and one marketing girl at the moment.
Okay, and who's building the product?
So currently we operate off of Shopify, but with use of funds, we'd like to ultimately have a digital upgrade where we're creating a sticky user experience through kind of account creation and useful content for our users. With that being said, I'll just answer the other 2. We'd like to move into our subscription model and then into the European market with use of funds.
Okay.
So we operate on Shopify for the time being.
And then how long have you been, when did you started this?
We started 10 months ago, so just at the end of 2019. So unfortunately, during the pandemic, we were able to maintain being cash generative, and then can't wait to see where it moves after.
Okay, thank you.
Thanks.
Two questions. I mean, the main one I'm sure comes up all the time, which is like a little bit more detailed competitor analysis.
Yeah.
And I guess the question around, which Flavia kind of asked about, but ownership versus sort of just being the middle platform where you don't actually hold any stock yourselves. Like, is it an economic decision? Is it a sustainability decision that you did it that way?
Yeah, so in order to remain asset light, we didn't want to be spending our funds on stock. And what we found through looking at Rent the Runway in North American models is that they moved into a profit share structure. So acting as the rental platform for major brands and retailers. And we're finding that to be a very profitable conversation with brands as well.
So you are open to doing that model?
Sorry?
Sorry, so you're saying you are open to that model?
We are implementing that. We have implemented that model, yeah.
And then I guess using Rent the Runway as an example, where do you guys see your differentiation from competitors being in your relationship with brands?
So what Georgie is great at is she is a trend forecaster for WGSN. So what we've tried to target is that niche market of kind of highly curated, unique pieces. And what we find on Rent the Runway, which is similar to some of our UK competitors, is that there's an overarching targeted market. So we're going after kind of the cooler, artier girl who really understands, knows her brands, is open to discovering new pieces and implementing those. Did that answer your question?
Yeah, it did. I just didn't want to. I don't want to monopolize all the questions here.
Yeah, sure. No, that's fine.
You know, it's so funny. It was that random tumbleweed moment where I let the ball drop, so I do apologize. We have about 1 more minute left. Do you have any thoughts, Simon? Anything else you want to ask?
It's not really my space, but I saw some companies doing the same in the US. And are they, in the end, a kind of role model for you, or how would you describe the starting point for your company?
Yeah, so I'm very lucky. I have a relationship with the chief strategist for the CEO of Rent the Runway. They're kind of the big player in the United States. So they've been very open in exchanging what's worked well for them, what hasn't worked well for them. And then we've been able to kind of differentiate ourselves off of that. So absolutely, we keep our ear to the ground on a North American market and see how that would translate with the European audience.
Okay, and how often do you expect does a customer in the end use your service? Per year, for example, or per quarter or whatever?
Yeah, so initially we have a customer lifetime value of about £2,500. That's, sorry, Tamo, I know you're rushing me. That's about 8 uses a year for 7 years. And then with subscription model, we do £99 per month. So we see that skyrocket to about over £8,000.
Okay, interesting.
Yeah.
Fantastic. And that is time really six hours. So thank you very much, Brooke.
Any further questions around?
Yeah, thank you.
Of course.
Thanks so much, guys.
Great presentation.
No.
Thank you.
Great presentation. Give it up for Brooke one more time. Fantastic. She was our final startup. Ladies and gentlemen, please give us a big round of applause, bigger than you did before. Loads of emojis in the chat for every single startup that took part today. And so that is Tim from Think Cyber, Adam from Hollabox, Iman from Whitelance, Gavin from Jet.now, Anwar from Vuebox, Osama from Lessgo, and of course, Brooke from Rotaro. You guys are awesome. Really, really well done. Panelists, judges, please do not disappear. Please do not disappear off the screen. I was hoping to ask, we have like 5 minutes to ask a couple of questions and maybe some of your insights into the startup scene right now. And so some of the work that you guys have been doing in regards to your investment funds and everything that your vast experience. The first question that I have to ask, is there any overall feedback that you'd love to give for the startups, the founders, or any one piece of advice that you think has worked really well with other founders that you've invested in and other founders that you've worked with?
I would definitely recommend to each founder, after the financing round is before the financing round, which means you have several rounds normally to do, start your business, and creating a relevant network to investors as easy or as early as possible is a recommendation I think is really helpful, because today you have often a time frame of 6 to 8 months which you have to calculate for a financing round, and already relevant connections to follow on investors. That of course helps you a lot.
Timo, Dylan?
I mean, it's pretty, like, all the pitches were great. I think a couple of things, always love to see some form of product, what the product looks like. And I think especially right now, if you're an enterprise solution or if you're relying on ad revenue, consumer revenue, it's kind of just explaining, how quickly value is shown to your customers, because, we're in a recession. Where spending is obviously not going to be as fruitful. And I think when we're looking at early stage companies now, just getting like an understanding why you're a must have, not a nice to have business, and that you're going to weather what the next 12 to 18 months look like.
Great soundbite. Like, it's so funny. I'm taking a break from social media, but right now I'll definitely tweet that and just say, do you know what? You need to be a must have and not just a nice to have. Fantastic. Love that. Great piece of advice. Go for it, Timo.
I think you guys did all a pretty good job. Like the basic foundations of the pitch was already there, covered tractions pretty well. And I think the basic feedback I got as a founder is that every pitch or every investment, presentation you make, just like, try to answer all the questions on each iteration. So whenever you talk to the investors, try to answer all the questions up front. And so the next round is much better.
Fantastic. Great summary. I've got some feedback from Flavia here, and she said, know your competitor. So it's 1, know your competitor. 2, know how you will make the offering self-service automate. automated. And of course, the last one is less capital intensive. So really good feedback from there, from all three of you. And in your experience, I think Dylan touched on it now, with the current climate in the way that it is, what do you think people are looking for when they're talking to startup founders themselves? What is the key characteristic from your perspective that will make people just tip that founder over the edge against everyone else?
I think when you're looking at what the founder is, I mean, everyone's got a different preference. But just understanding where I don't want to say where the world is going, but it's understanding if your pitch hasn't changed between now and 6 months ago when you're sort of pitching the same business, there's probably probably some reevaluation to be had a little bit, just because I do think most industries are changing, and there needs to be an awareness, because you don't want an investor to have to ask you, well, what about COVID related fears, and what about economic related fears? So if you're a business relying on advertising revenue right now, just be prepared to answer how you deal with the fact that ad budgets are being cut. If you're a business reliant on people traveling, as a couple of these businesses have today, I think I tried to ask one of the companies about staycations. People we're not moving, we're just not flying as much. So what are the sort of short-term propositions that your business can start to offer that just make you look a little bit more sort of pandemic resilient?
Fantastic. Any thoughts, Simon, Timur?
Yeah, I think so. My feedback has always been the same. If you're a product-based founder, you can always make iterations and change on. So, if the job becomes really easier, if you know how to build and talk to users and iterate, you can always come to a solution really quickly. So if you don't have that as your founding team, that always becomes really hard.
Fantastic. Simon?
Nothing more to add. You have to know your customer. That's really important. You have to understand what needs they have, and you have always to keep that in mind when you build your product.
Nice.
And just to reiterate Timur's, and I apologize if that's the wrong point. I think if you don't have a product and technical person on your founding team, go find one.
Because that's important. Do you know what? Our time is up. Flavia actually said one thing, which was traction. Early traction for her is important. That actually allows her to invest in the startup and believe in who the person that she's working with. Guys, you have been awesome. Ladies and gentlemen, if you're still in the chat, please give up one more time for our amazing judges. They have been fantastic. You guys, thank you so much for being with us today. Simon, Timur, Dylan, and of course, Flavia, thank you so much. Do you have any final comments? I always say I don't want to leave on the last word. I leave it for the judges. Do you have any final thoughts, any final comments before we leave?
Stay healthy.
I love that. That's fantastic. Simon said, stay healthy. Ladies and gentlemen, the network room is now open. So please go begin to network with some startups and see who you can meet within the process. You can find all of the startups in regards to their details have been left in the chat. So if you feel free to stick around and look through the chat if there are any comments, or is there anyone else that stood out for you? Thank you. I have been Tambo. I have been the Insight Coach. I hope you've enjoyed this. Ladies and gentlemen, please give yourselves a round of applause. Fantastic. Thank you.
Thank you, Alan. You're a round of applause for hosting such a wonderful event.
Thank you, Tambo. So was great.
Nice. Awesome. Have a good day, guys.
You
See you later.
Bye-bye.